In the near future, the European Union and its banks will be investing billions of dollars in XRP. In order for you all to be ready for what is about to happen, I will explain why that is included in today's film. We're going to discuss interest rate developments because, as you may have seen, Donald Trump has been very critical of Jerome Powell, the Federal Reserve's chairman in the United States, and he has a solid reason for doing so, because the EU is currently putting them in a position to surpass the US in this global economic transition. Furthermore, given the ongoing trade disputes, Donald Trump most certainly does not want the U.S. economy to be outperformed at the moment by the European Union, China, or anybody else. Everybody must be in agreement. Why then is Jerome Powell so angry with himself? He's pointing to the EU, but why? And how is the money supply doing? And what impact will that have on XRP's price? I'll address each of these queries in today's video, using instances from the actual world. Thus, rates were recently lowered by the European Central Bank Commission, or ECB. This is obviously quite significant since it basically adds billions and billions of dollars to the world's money supply. Additionally, more money is easily investable in cryptocurrencies like XRP the larger the global monetary supply. Crypto assets have historically performed exceptionally well in the immediate aftermath of every increase in the global money supply. Although it doesn't happen right away, it's usually a leading indicator, and it takes XRP 2 to 3 months to catch up. In other words, reducing interest rates essentially increases liquidity. Naturally, because interest rates are lower, it lowers borrowing costs. It relaxes and lessens the restrictions on monetary policy. Once more people are able to enter and borrow. Makes borrowing simpler for people. After then, there is excess liquidity, which can be utilized for investments once it enters the market. Currently, the market anticipates that such rate decreases will occur in the future as well. Therefore, in addition to the 25 basis point cut this quarter, we may see a 1.5 to 2% cut by the end of 2025 in the European Union alone. Since it is so enormous and no other YouTuber is truly providing you with the numbers, I will give you all several examples of what this implies for the markets. As we can see, the precise amount is uncertain, but the ECB's rate fall to $2.25 will boost liquidity by reducing borrowing costs and promoting lending. Going ahead and examining past trends, it indicates that the money supply could increase by $100 to $300 billion by 2025. This we can see the precise amount is uncertain, but the ECB's rate fall to $2.25 will boost liquidity. Naturally, this depends on the precise amount that the markets choose to purchase and invest in during these more unpredictable times. This we can seize and dispute %. Therefore, this 25 basis point drop could lead to a $300 billion increase in the money supply in the markets over 2025 if there are any news items that provide greater certainty. However, as I have stated, they intend to reduce rates much further by as much as 2%, which is essentially 10 times greater than what we have just done. Therefore, we might be looking at $3 trillion from Europe alone instead of this $3 billion. Europe alone is bringing in $3 trillion for the markets. Because cryptocurrencies are an alternative currency system, they have historically outperformed all other assets and absorbed the great majority of this liquidity as the money supply has grown. However, as Jerome Powell himself suggested, the United States is projected to implement 2 additional rate cuts by the end of this year, despite having a clearly larger economy. Donald Trump is putting a lot of pressure on Jerome Powell because he seems to believe that now is the ideal time to lower interest rates. Jerome Powell believes it might be preferable to wait a little while longer. Tell me what you people think would be a good idea. Tell me in the comments section below. However, I want to discuss the implications of a rate drop of 50 basis points, which has already occurred several times. Looking at the conclusion, we can see that over the next 6 to 12 months a 50 basis point reduction in the U.S. interest rate would probably bring in between $200 and $500 billion in direct liquidity, cash and credit to the markets. $500 billion. Completely crazy. The United States is enormous. Of course, this helps the United States invest more, obtain more mortgages, and of course invest more in all the amazing things like Bitcoin, which is something we truly want to do. Additionally, this greatly aids the banks, which are currently under a lot of strain. Thus, $500 billion is a substantial sum. Once more, however, the U.S. does not intend to implement a single rate cut. They intend to perform at least 2, and probably 3 or 4. Therefore, you will receive an additional $2 trillion from the US alone if they do four times this. Additionally, the EU alone will provide several trillions of dollars, and you begin to see how rapidly this money supply will have a significant impact. Correct. I therefore pose the issue to Brock: how much liquidity might enter the markets over the next 12 months if the US and the European Commission both cut their interest rates by 1 basis point before the year ends? Furthermore, this is only one foundational idea. Correct. Europe intends to complete 2 full basis points, as I already demonstrated to you all, and the US intends to do 1 or 2 depending on the situation. Correct. Thus, the values we obtain here may actually be doubled. According to the final calculation, the US would receive roughly 3.8 trillion, and the Eurozone would receive roughly 1.3 trillion, which is 1 basis point. Correct. Alright, so that puts the range between 1.8 and 5.3 trillion. And I want to let you know that there's a chance we'll get twice as much liquidity in the markets, more than $10 trillion. Indeed, $10 trillion is a substantial sum of money. Alright, that's a substantial investment. Investing $10 trillion in a single stock does not result in a mere $10 trillion increase in value. There will be many more elements that will enable these equities to follow the monetary supply, thus it will cause much more than that. So yes, the response is rather obvious when we examine real-time M2 and M3 data. The money supply, or M2 and M3 supply, is increasing. Right now it's rising significantly, and we always know from past experience that it takes 6 to 12 months for the markets to fully appreciate in value. We are aware that the US is eager to lower interest rates, and this will most likely happen shortly. We are aware that the Eurozone Commission recently lowered interest rates, and we now know that other nations are attempting to follow suit. Like China, whose enormous economy, which we haven't even touched on yet, will once more provide trillions of dollars to the world economy. Completely crazy. Therefore, it becomes much more clear why Trump is suddenly acting so aggressively with Jerome Powell when you consider that the impact it will have on the markets and how beneficial it will be. He's determined to get Powell to do this. As you can see, our guy is lowering rates in Europe. However, our guy adds that he wants to act cute. Trump also claims that Powell is awful and that Fed officials lack intelligence. In essence, he is pursuing them, destroying them, and claiming that they are incompetent and that should nothing be done, the US economy will be utterly destroyed. And in order to get things done, he must fire him right away. Furthermore, given the recent developments surrounding tariffs, it is clear from the banking industry that the US needs liquidity and that the markets could benefit from it as well. Although tariffs are inherently inflationary, if we can at least increase liquidity for the US, we can eventually balance things out a bit more and see some growth, which is what the US sorely needs at the moment, in my opinion. The rest of the globe also does. Everyone is hoping for some progress. They are not to fault for it. Having stated that, how does this specifically impact XRP and the monetary supply? And what a fantastic question. When we examine historical background, such as the 2020-2021 bull run, we can see how interest rates and the monetary supply interacted at that time. The relationship is rather obvious. When monetary supply increases, cryptocurrency prices follow 6 to 12 months later. As a result, by the end of this year, most likely within 6 to 8 months, we will be witnessing the impacts of the EO Commission. Prior to the end of this year, we are likely to witness some really pleasant rallies in November and December. It will continue.